Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. You can find him on Twitter at Due Diligence Guy. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be on, Jim. I wish it was under better circumstances, though.
The market panic, and that's all you can call a 20% drop over a couple of weeks. They say it's the coronavirus, or was the market ready to tip over anyway, and the coronavirus is getting blamed, but perhaps wasn't the real reason? What's your take on it?
Well, maybe the best answer is, does it matter? It's happening. And when something like this happens, it's rare to see the markets bounce back. Though, rather than dodge the question, though, I should say that clearly the coronavirus is having an impact. You see it when there's no other news and some big scary headline comes across and the market reacts. So there's no doubt in my mind that that is a factor. But I wouldn't say it's the only factor. We saw, for example, after Super Tuesday, or Super Thursday, if you ask the victor, that there was a bounce on Wall Street, a substantial bounce on Wall Street when Bernie didn't come out on top. So the markets are paying attention to more than one thing. But I think this actually comes back to something that's important and beyond the immediate causes. And actually my fellow Puerto Rican, Peter Schiff, was the one who said this, and it really stuck in my mind. He says, it's not the pin that matters, it's the size of the balloon. So whether it's the coronavirus or whether it's politics in the United States or whether it's just that this was a record bull market on Wall Street that everybody knew had to come to an end sooner or later, the pin happens and boom, and you have to deal with the aftermath. And it could have been all three pins or something else we don't even know about. It doesn't matter. It's happening now. It's big enough. I don't think I'll go out on a limb here and say I don't think this is likely to be a 2018 style event. It's looking more and more like a 2008 style event. That said, the powers that be will obviously do everything they can to prevent that. The Fed has already acted with an emergency rate cut. Trump's on Twitter and he's on the air all the time talking about all his promises of fiscal stimulus and other things he's going to do. We'll see. Maybe they can throw enough money at the situation to cause markets to rebound, but I wouldn't count on that. The proximal cause is medical, so throwing money at it, isn't going to change that. And then you have other causes, supply chain, the thing with the oil, with OPEC and the Russians coming to blows. There's a lot going on, but I'm not sure that just throwing money at the problem is going to do any good. Now, let me rephrase that. I'm pretty sure that just throwing money at the problem isn't going to fix it. So I'm talking a lot here, but the carry home message here is quite simple. I don't think the bottom is behind us yet. I think the damage is serious. I think to the degree that confidence is what the modern economy runs on, confidence has been profoundly shaken, and that's not going to go away quickly.
When you're in this kind of situation, what kind of advice have you been giving your readers? Well,
I think there's a lot I have said and saying. In addition to don't rush in to buy, the bottom is likely not yet behind us. I remind readers about the lessons of 2008. We have seen a lot of what we're seeing now before, unfortunately, or fortunately. It does give us guidance. One thing is that when this started happening, we had some of these first big waterfall days on Wall Street, and gold sold off as well. A lot of people were saying, oh, what's wrong with gold? I thought it was a safe haven. Well, it's the exact same thing happened in 2008. When you have a market fluctuation is one thing, but when you have a major downdraft and people who are out on margin are getting margin calls from the margin clerks at their brokerages, or funds are facing redemptions from panicked shareholders who are calling them up and saying, I want my money back, right? The fund has to sell anything it can get money for. And so you see even, the assets that are doing well will come under pressure because they are doing well, and people can sell them and get money to cover their liquidity needs. So we've seen that before. Don't panic is the advice there. Don't panic. On the other hand, don't rush in either. I can't stress that enough. I don't think the bottom is behind us. If this is turning into a 2008 style scenario, that lasted several months from top to bottom. And okay, the Dow officially entered a bear territory today at the close, at least as you and I are speaking. It's a Wednesday afternoon and the Dow just did that. That's no reason to think that that's going to be the end. If anything, investors will wake up tomorrow to see that headline, Dow enters bear, and it'll bring more selling. And that could bring more pressure to bear, even on safe haven assets. Like gold, which ultimately, a store of wealth. What do you store wealth for? For a rainy day. This is a rainy day. So don't be disappointed if you see gold under some pressure. But don't be too greedy to rush in and say, these stocks are my favorite stocks are on sale. I understand that. I feel that myself. I look at stocks that I liked 25% higher or even 50% higher in some cases. I want to average down. But experience tells me that it could go a lot lower before it heads higher, and there's no need to time the bottom. I don't need to be the guy who bottom ticks the market. Maybe today is the bottom, and it goes up from here, and I missed the bottom. So what? If it goes up from here, experience also tells us it'll go up for months and months, maybe years. It was years from the bottom in 2008 to the top in 2011. So there's absolutely no need to rush in anywhere because it could get a lot worse. That's my advice.
We'll have more with Lobo Tiggre right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, did anybody expect this price and production cutback war between Saudi Arabia and Russia that's already hitting an oil market that was suffering from a global slowdown, again, some of it caused by the virus?
There's probably some guru out there somewhere who predicted this and now has bragging rights on that. I'm always cautious about these bold predictions that these gurus make because if they do get lucky and they get it right, they can sell you their product or service, whatever it is that they're peddling. And if they get it wrong, you've already given them your money. There's a separation between the prediction and the financial consequences for the person acting on the person's track records. I'm always worried about that. But I think it was largely unexpected. Now, you could say that it should have been expected, right? The travel industry was under pressure, cruise ships, airplanes, airlines canceling flights, lots of flights to Asia, but even cutting back flights to elsewhere, flying empty airplanes. Clearly, all of this had obvious investment implications in the whole oil patch and price implications. But I don't think there's anything based on that would lead anybody to know that the OPEC deal with Russia was going to break down. I've heard my Russian is not fluent enough to really read original language sources, but I've heard that the Russians are saying, oh, well, with the decrease in demand, there was no reason to agree to more supply cuts. Who knows how low it will go. That makes no sense. That seems the opposite to me. If you're looking at decreased demand, that is a reason to cut supply even more, to try to shore up the price in the face of decreased demand. Why would you flood the market with more oil while demand is going down? That just exacerbates the problem. Makes no sense to me. It makes more sense to me that the Russians weren't honoring all their deals with OPEC, and the Saudis got tired of it. Russia was, I could certainly see Russia taking advantage of the situation, taking advantage of gullible other countries going along with restrictions that they didn't fully intend to abide by. I can also see both sides. Maybe this is less about them having some big fight in-house and more about both sides saying, let's take the U.S. shale producers down.
Well, if the Russians broke an agreement, it wouldn't be the first time. They always promised the Ukraine they wouldn't cut their natural gas supplies, and I think it's happened at least twice, if not more than that. And that's always the threat that Western Europe faces from using Soviet natural gas. You never know if the Russians are going to continue to follow up, especially now that Putin is having their constitutional court rule on whether he can be president for, I don't know what, the next 25, 30 years?
Yeah. King. He wants to be king, Putin. Yeah, he's already got the government taking his side. No surprise there. But you know what? You're kind of edging into the larger geopolitical question here. And I think that's worth examining, not just from the oil patch, but in a broader picture. Let's stipulate, just for the sake of argument, that the coronavirus is no worse than the common flu. And I'm not sure that's quite true, and arguments can be made either side. But I don't want to get into a medical debate. Let's just pretend that we know that the coronavirus is no worse than the ordinary flu, and that all this panic and overreaction is a bit silly. Okay, let's pretend we know that's true. Even though it's true, it doesn't matter. It is what it is. Silly or not, the overreaction is there. That's the market reality in front of us. And this has big consequences. It makes no sense to say, you're being silly. It's too late. They've been silly. So demand destruction, supply chains broken. What are the consequences for the various countries that are most seriously impacted by this? What deals will be broken? What are the knock-on effects around the world? I mean, it strikes me as not just a medical problem, not just an economic problem, but potentially a geopolitical problem. When countries face serious problems, they often look for, the tail looks for the dog to wag, as we say, wag the dog, right? Some excuse to look outside of our problems and blame them on somebody else. I'm not predicting World War III here. I'm just saying that whether this COVID-19 thing deserves the attention it's getting or not, it is getting it. It's causing massive disruption, and that has potentially serious knock-on effects. Well, just for one thing, let's say, in the same way where I'm stipulating, let's say that the virus is silly and no big deal. Let's also say that the global economy was already weak. There was plenty of data, the World Bank cutting its growth projections for the global economy. There was plenty of data out there already saying that the global economy was weak. The negative interest rates, Germany in trouble. So on top of that, you get this virus and the panic around it and the different consumer choices around it and the different business reactions to it. The businesses can't ignore it. Even if they know it's silly, if they knew that, they'd still have to act this way or they'd have liability issues. So it's a foregone conclusion that the businesses are going to react. And of course the politicians are going to react. They have to, whether it makes sense to or not. So all of this is happening in an environment where the global economy was already weak and U.S. yield curve had inverted. The recession signals out there, despite, some parties talking about how great everything is, there's plenty of reason to think it wasn't so great. So if, as we were saying earlier, the pin has burst the bubble, there was a bubble and it's burst, you can't just put a Band-Aid on it and make it better. So it's a mistake. Bottom line here, it's a mistake to say, this virus is just an exogenous factor. As soon as the weather warms up, flu season's done, it'll be gone. It's one and done, and we can forget about it. It's back to happy, happy, joy, joy. Well, that's not true if you had a situation that was ripe for a fall. And this is, needle pricking the balloon, the push that led to the fall, whatever. Some bad things are happening now that have large-scale consequences. And I think it's worth thinking about that the context was not one of robust growth around the world.
We'll have more with Lobo Tiggre right after the break.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, gold is not in trouble. You told me before we went on air. What's the situation with gold? The price did come down, but was that just people meeting margin calls?
So no and yes. Yes, price did come down. Yes, I think it's people meeting margin calls. No, gold is not in trouble. I don't see how anybody can look at gold at 1635 and say, "Oh my gosh, what are we going to do?" 1635 is a great price for gold. The producers who were marginal and survived through the 1300 prison that gold was in for years. I mean, they're going to be either they were making money before and they survived and now they're going to make a lot more, or they were marginal before and their marginal improvement is going to be huge. You're going to see, and if that happens at a time where just about every other sector in the broader markets is getting hit from the coronavirus, from the OPEC war, whatever, or actual recession, if the pin has burst the balloon and we go into recession, you're looking at a massive sea of red ahead, and the gold sector is beating guidance. That could actually set up a perfect storm here that really turns things around. Gold's holding up. Gold producers are doing great. You could see a huge shift of attention. It could be like pot stocks in 2018 or Bitcoin in 2017. A market that's desperate for alpha sees one shining area of green amongst all that sea of red, and I could see it like moths to the light.
Now, we haven't talked about uranium for a while. Is anything happening there?
A couple interesting things, actually. It's good that you bring this up because it's easy to focus elsewhere. And one thing is that uranium itself continues to sort of muddle along sideways. It's not really doing anything. The uranium stocks, however, have gotten whacked with everything else. So that's no surprise. You have a big market panic. Everything gets sold. Lots of babies tossed out the window with the bathwater. That's happening to uranium stocks as well. No surprise. But it is worth noting that the fundamentals haven't really changed for uranium. And even if we go into a global recession, well, that would be bad for restaurants or travel or cruises or these other things that are being hit from the virus. It's not really bad for the utility companies. I mean, maybe the ones that are providing surge power to aluminum smelters or something like that. Okay, yeah, maybe they won't sell as much power. But baseload power that keeps the lights on at night, that's not going away. People, even in a recession, are going to want the lights to turn on at night. And they're going to want to be able to watch their Netflix when they stay home and don't go to a movie theater. So I'm not saying that uranium and nuclear power or the utilities are going to be completely immune from what's ahead. I'm saying that on a fundamental level here, the business really hasn't changed. So the sell-off in the sector is after we have confidence that the bottom is in, I think is a buying opportunity shaping up. But there's one more thing to say about this, and that is we did see on several days over the last couple of weeks when markets were down, we saw uranium stocks, various uranium stocks actually be contrarian and head up back into the green. So I don't want to make too much of a fuss about that, but it is interesting to me that there are savvy investors out there, evidently, who get that uranium is not like Netflix or Amazon or one of these other market darlings. It's something that has a fundamental that is different, and should have some shock resistance to the shocks that we see ahead for the broader market.
Lobo, how would you sum up things then right now?
My new motto for this year is go to cash and wait for the smash. And that's really the bottom line. I've said a lot about this. If your audience wants to come by independentspeculator.com, there's plenty of material for free in the Speculator's Digest area. I have some free special reports there digging into things. One other thing, though, is if you're looking at going to cash, you're looking at your portfolio, what do you sell, what do you hold, what do you look to buy if it gets cheap again? A little commercial plug here. I have a new service called My Take. It's not my flagship, The Independent Speculator newsletter. It's more entry level, and it's just guidance on a bunch of stocks, whatever the audience asks for. I take requests. It covered almost 200 companies now. So if you're wondering what to do, what to hold on to, I want to let you know that I do have guidance for people asking these questions. But the number one takeaway is, and I may be wrong about this, but you know what? If I'm wrong, it's okay. You don't have to time the bottom. But the thing I'm saying is, go to cash, wait for the smash. It is not behind us yet. I do not think so.
Lobo, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Lobo Tiggre from the independentspeculator.com. Find him on Twitter at Due Diligence Guy. And is that My Take? Is that a mytake.com or a branch of your independent speculator?
Thanks for clarifying. It is a brand. It is part of anything you would find at independentspeculator.com.
Again, my guest, Lobo Tiggre. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.